Hello, fellow traders. 'Tis I, the Rumpled One. Tuesday, January the 9th, in the year of 2018. More price action. Let's jump right into it because I've got a lot to tell you today. But we're going to take a little pause, especially for those new to the channel, new to trading, money and risk management. Remember it. Okay, we're looking at the weekly chart here, and we can see the euro's been taking a tumble. Cracked through the previous week's low at 1.2001, and it's at 1.1928. And just for those who want to know what indicators I have on the chart, looking at the daily, we can see it cracked through yesterday's low. And can you see the price action on this chart? Let's point it out. Green candle made a high. Highest high you can see there, right? Next candle didn't make a higher high. Closed red. Next candle, once again, did not make a higher high. It broke the low of the previous red candle. We call that a rat reversal right there. Now the other level is here. It broke the low of the green candle. That is another entry point. So as you can see, there was some nice price action there on the trading the daily chart for those of you who don't want to scalp. Once again, we have buy zone. You got a couple of triggers there. It pulled back, broke through the open, and if you went long, you probably got stopped out. You had a trigger here. You took some heat. Maybe you stopped there. Maybe you don't stop until there. But you at least took some heat, and then you could have made it all back here. Oh yeah. Have to remember to do that. The indicators. You guys can pause the video so I don't have to put those up too long. And as you can see here in the rat zone, wasn't much of a rat zone at this time period. Came down here, and here you can see it's struggling. Now somebody asked or said that, hey, what can I do? I keep losing when I do the rat zone. Well, move up to the H1 time frame or possibly H4. Reason being, you won't be so jumpy. So if you look here with the H4, oh, by the way, if you come down here where and it says horizontal scale, you can just hold down the left button, and if you move it to the left, it scrunches. You move it to the right, it unscrunches. I don't know if scrunch is the proper word, but I think you understand what I'm saying. So you can see right here, H4 euro. We know we're in a down day. You know, we've got the bias, okay? But you can see here, we've got a green H1. It's telling you it's okay to buy. But when you've got the daily and the weekly bias, you better be in and out quick. Or if this shows any signs of turning against you. So you see here, you don't get many trade opportunities when you're looking at H4 and using the H4 candles for triggers. So if you drop down to H1, you see here it put in a low, but red green breaks the high. You had an opportunity. Let's see, somebody told me, oh, I have to oh, I don't have my tools chart here, so I'll just do it the old way here. So we've got that high 30, so you maybe picked up 4, 5, 6 pips if you entered here on that break. And you see price started coming back down. You see price, a red H1 in a rat zone, in the green rat zone, you do not trade. It's not okay to buy. Okay, it's only okay to buy in the green rat zone if you've got an H1 bias of long. So hopefully that'll help you trade the rat zone profitably. So if you're having troubles, once again, move up to H1 or H4. H4 is going to make you wait. That's going to improve your discipline. H1, it's a good trigger if you think about it. Price makes a new low on the H1. Next candle, it comes back down, it starts red, turns around and goes green. That's the market telling you something. And here we go, have it once again. Price made a new low on H1. Market came down, couldn't quite make a new low and reverse. Now, if you notice something, that's the close, right? But this is the lowest open, so that would be a holo trade, lowest open. So let's put this back down to M15. And here, once again, you can scrunch the chart, hold down the left key, pull it down, scrunches, drag it up, unscrunches. And like I say, I don't know if scrunch is the right word, but that's what we'll call it for now. Okay. And I don't remember. Did I do that? Moving on. We're now looking at the pivots. So we had the open, but price did not hit the pivot. So we've got a missed pivot. Look for price to return here. That's something you want to stick a line or something on your chart, looking for price to come back and hit that 119.91. Now it might not ever do that, but usually missed pivots get resolved, but not always. There are some that just stay missed. And that one could stay missed for a while, considering it's so near that 120 mark. Here's the monthly open. If we have a down month, it's not going to return. Okay, we're talking price action, more price action. We'll get to the more price action in a bit. We're looking at the M1 chart here, just seeing that quick price action. Now, I remember reading somewhere, it was some thread on some forum, a guy was saying, you know, if you're going to scalp, you really need to scalp it. Like the M1 level should be the highest level, and from there, maybe you should even go down to some tick charts or something. Well, if you hit F9 or key F9, the F9 function key, it brings up the this little buy screen here, and then you get your the bid-ask chart. Now that really I don't believe is a tick chart, because see, a tick chart would show you each trade as it goes by. And as you can see here, price is moving up off of this 3-ball low. Red candle, green candle, breaks the high of the green. You'd be up a whole pip right now. Now, looking at the H1 chart once again here, and I keep forgetting to put the magnified market price indicator up, but I'll have to remember that. Anyway, you can see once again, just trading at the horizontal line. You can see the struggle here. This is the yesterday's close, yesterday's low, and that trade is a wick zone trade. And you can see here once again, price does not like to stay in the wick zone, and it came out the bottom side. Now, we also have the highest open, lowest open. We talked about that right here. You see the lowest open, lowest H1 open. Price shot up and came back, headed back this way. Okay, now more price action. I'm bringing up the squiggly just to show you something. You see here, you probably wouldn't have gotten into this trade. Well, or gotten into, okay. You wouldn't have entered this trade until about right here, if you're basing it on the squiggly. Why? You want price to close below the line before you go short. So if you did that, you would have triggered in around 1.1966, the open. Oh yeah, well, before I forget. I think I forgot on the last chart. But if you took a price action trade, you could have triggered here at 120.21 or triggered here at 120.02. So you would have been in the trade while these squiggly line traders would still be waiting for a signal. Now, some people may have taken the cross right about here. If you took the cross, you'd be pretty much the same as if you took the price action trade. But here we still beat you with the red rat reversal. So that's just a little bit more on the price action. But wait, there's even more. Okay, yesterday I put up a video about the strength, and you know what? I left off a calculation. So here I have the new one highlighted in low. You take the close minus low, you divide it by the high minus, that should say, that's wrong. Okay, let's fix this right here. This is supposed to say high minus low. So you get these videos in real time. I don't like go back and edit. Okay, strength calculation. So close minus low divided by high minus low. High minus low is the range of the candle. Okay, so close minus low lets you know whether or not price, if the buyers or sellers are win, because if the close minus low is bigger than 50, then that means over 50% of the candle, and I just realized this is also a percentage. It says that from the bottom to the close is bigger from the high to the close. Okay, so in other words, close to low is bigger than high to close. That means the buyers pushed more. They won that tug of war. They pushed further. Okay, I guess it's not a tug if you're pushing. It's more like a rugby something or other. Anyway, enough of that. If you have questions, ask. So the other thing about the price action is I loaded up the 2017 price action support resistance, and basically what we have, we're marking highs and lows. Okay, and what we're doing is, you see here we had a low and a low twice, but here we had a low that became a high, so the support of this low became a resistance. So that's what this indicator, it looks back and it sees how many times this happened. Now, one thing about this indicator, it has a threshold input. So right now, if it's within half a pip, 0.5, but you can change that to 0, and then it has to hit the same price perfectly. In other words, to the point. So you can see here, it cleared away some of the lines, but